Eric Muathe, Muathe.com, with world market analysis for the weekend of March 4th and March 5th, 2017. Let's take a look at how Asian markets closed. You can see for the most part down sessions, slightly down. Take a look at European market at the close of Friday's session. We can see a mixed bag, and we can see the one that was actually doing well was the French market, up slightly. Let's take a look at the Americas with about 1.5 hours to go before the close of Friday's session. And we can see that the Brazilian market is up about 1%. Canadian market is up about 0.37. US markets are unchanged for the most part. Let's take a look at those charts. Let's begin by taking a look at the Australian market. We can see this past week it found support on its daily RSI line, as you can see here. So we hit this level and we bounced over the last couple days there, and also this is a nice bounce around an upward sloping 50-day moving average. So the daily chart looks like it is stabilizing, which is great. Now if you take a look at the 15-year monthly chart, so 15 years worth of monthly data, we can see that the challenge is if it can hold and stay, in other words break out above 5898.48, which happens to be the highest monthly close for 2015. So if it can jump and stay above that, that would be good. Otherwise, a failed breakout or failure to move above this price ultimately leads to a pullback. Keep in mind, we've been talking about potential resistance on the top side, monthly RSI. So to keep it simple, until we move above this line, one can assume that this market is sideways at best, potentially down if this resistance is confirmed. If we take a look at the Chinese market, there was a chance here that it could break out above the recent weekly closing high. The level we were watching was the recent weekly closing high, and that is at 3261.94, which is the closing high for late 2016. So the market did try to move above this level this past week, but failed. So that's not a good sign. Keep in mind, we also have that topside RSI resistance line that is coming in play. And until the market can move above that RSI resistance line, chances are this market is going to be sideways to down. If we take a look at the Hong Kong market, we can see that if you go and consider this 5-year weekly chart, so 5 years of weekly data, take this intraday low, connect to the weekly closing low there, form a straight line, something like this. You can see that we did break below that level. Once we broke down here, of course the market did go down. I think what's happening here from a visual perspective, we are coming back over the last couple of months to test the break line there. So if you draw a line from there, you can see that it gives the most recent highs. You have rejection here and a movement lower. And over the last 2-3 weeks, we've tried to move above that line. We seem to be stalling. There's another view, which is the recent RSI break, and that is also being tested. As you can see here, there was a recent break on the trend. It's trend line break off the highs here, and again, of course, we go down. We draw a line from there, which is the uniformity line, and you can see that we hit that line with uniform action. Check the description for more about this uniformity principle for those who are new. So there was resistance here, which again does tell us that this is a short-term high, maybe a major high. We shall see. Now let's move on here. We got 9 years worth of monthly data for the Hong Kong market, and similar type analysis. What we are doing here is coming back to test the break line. So this trend line connecting this monthly closing low, this monthly closing low there, and another monthly closing low. You form a nice straight line. And so going back to the lows of 09, And you can see what happened is once we broke through here, market's been down since. We've tried to come and move above that level and failed. So we tried here, we were rejected, market's gone down. We are trying to move above this, and as of the new month, it's early on in the month, but seems like this is also being confirmed as resistance. So clearly, if the market is to do well, the first order of business would be to break out above that blue line of resistance. You can also look at this from the monthly view, which is this trend line here. This trend line break corresponds with movement off the highs of 2015. RSI break off the highs of 2015. Draw a line from there, and that line is currently being rejected. So this RSI line, the market has tried to move above that line twice. So let me draw that line again. Bear with me. You got this line here, which was the break of the highs. Draw the line again, and you can see the market's been struggling to hold above that line. So as long as the market is showing resistance on that line, we can assume that this market still has a lot of work to do. If the market wants to move higher, it needs to move above that line, or it needs to clear the current monthly resistance. So net looks like the market is showing resistance. If it can clear the resistance in price here, if it can clear that and can clear the RSI resistance, we have to assume that the next meaningful direction is down. If you take a look at the Japanese market, we can see that Japan did try to break out above the recent daily closing high, but as of Friday, it was down below that breakout level. So right now we can see that early signs here of a failed breakout. The level to watch there was 19,594.16. Keep in mind, it does correspond with the previous break line. This RSI break gave this high here, and this has been recent resistance, something we talked about. You can see resistance here off the highs and a pullback, double top rejection for a shallow pullback. And again, as of Friday and Thursday of this past week, we can see the market hit that level and is already showing resistance. So day to day, unless the market can stay above 19,594, chances are this is a failed breakout. Otherwise, those who would like to see the market higher would like the market to confirm strength by holding above this number. By the way, what we see here with this nice move to new highs this past week is a good lesson of what happens when stocks bounce back above RSI 50 with uniform action. You tend to get a reaction that takes the stock back to new highs. And if you want more about this, I'll make sure to have a description, a link on how this plays out, and with many examples. But the key here is the recent movement over the last couple of days was because of RSI support line coming in play, as you can see here, and also the fact that it went below 50 and back above it with uniform action. But now we see that it is coming back to test the breakout level. As of the last 2 days, it is struggling to hold above that price range. If you take a look at Japan's 2-year weekly, we can also see that this is a breakout attempt on the weekly time frame. After spending some weeks in what can be considered nice sideways action, we've been trying to move above the recent range, and the recent weekly closing high is 19,454.33. So if the market can stay above that price, that's good. Failure to hold above this price would be a failed breakout, which would be another sign of a market that is not as strong as it might seem. So market bulls need to keep the Nikkei above 19,454. Otherwise, a failed breakout might ultimately take this market down. Ultimately, as we have been observing on the monthly chart, this is where it needs to hold above on a monthly basis. It needs to stay above this line here. Otherwise, this line becomes a trap. This was the break line as of late 2015 here, this break of that trend line. brought the market off the highs of 2015. So we've been observing that it needs to stay above this line if it is to do well. Why? Because if you backtest this line and go backwards, you can see that it gives you some of the major highs. In fact, if you go all the way back here, it gives you the movement off the highs of late 80s, early 90s. We move below the blue line here off the highs of 96 for a major drop. And again, we see that it went below the blue line here for a major drop in 2000, 2001, 2003. There was another break here, which is this movement off the highs of 2007 before we go into a major bear market of 2008. So right now we would want to stay above this blue line, which would be great. Staying above the blue line has been constructive, as you can see evidence of this, because recently when we moved above this blue line, the market had a nice chance of recording this nice acceleration. So if it can stay above that blue line month to month, that's great. If it finds resistance here, that's not a good sign. But that's not the only market that has been showing that type of potential negative monthly chart setup. Take a look at the Nifty, and we can see here that the recent break did bring the market off the highs here of 2015. So the last thing anybody wants to see here who's bullish here is the market confirming double top rejection on that line. So let's say if the market confirms rejection here month to month and here, that's not good. Keep in mind, if we backtest this line, simple line going backwards, we can see that it gives us the sell signal level in 2004, actually 2009, oh not 2000, 1994, excuse me, which is this high. We have a break here off the highs there, and of course we can see every break leads to what can be deemed a bear market. We break here again, which is this drop in 2007, late 2007, before we get into this bear market territory. Double top rejection here for the highs here and here in 2010, I believe, before we drop. And so what I'm getting at here is bulls would not like to see this being confirmed as double top rejection here on the monthly chart. That would be bearish. Now if we zoom in, one thing we can see is that the market needs to stay above the recent monthly closing high. This monthly closing high is a level to watch. The monthly closing high going back to early 2015. If the Nifty is to do well, the first order of business would be to hold above 8844.60. A breakout and staying above that price would be what the bulls want to see. Unfortunately, if it cannot hold that level, then the bulls are going to have to contend with a down market. So a breakout and staying above 8,844.60 is what the bulls want to see. Otherwise, this might be a problem. And again, the issue is this level here on the monthly RSI. If this is confirmed as resistance, keep in mind we had resistance here and we had a drop. Following that resistance, as you can see, we dropped here following this resistance. And now if we can confirm resistance here, might suggest again we might go into another multi-month drop. So the risk is the blue line confirms resistance, and the risk is that we have no breakout and that the prices eventually move back below 8844.60, which would be bearish. One thing we can point out here is on a weekly time frame. This is the weekly closing high for 2015, and the market has been trying its best to hold above that price range. In other words, there's been a recent breakout attempt on a weekly time frame. The level that the market needed to stay and needs to stay above is 8937.75, and this goes back to this weekly closing high in early 2015. Here we were rejected and ultimately we drop. Over the last couple of weeks we've been trying to hold above that price range. and so far we are being rejected. That's not a good sign. And also we've been talking about this weekly break line. So this was the break of the highs here, and of course we drop from that resistance. So we draw a line from there, which is the uniformity resistance line, and again check the description of this video and there will be a link explaining this uniformity principle. So a resistance here might suggest that now with that resistance the next meaningful direction is lower. There's one more consideration on the weekly chart, which is the top side RSI resistance. That is also coming in play. If you draw it like that, connecting recent RSI highs, you can see that we are coming close to confirming rejection on this top side RSI resistance line. So clearly there's a lot of work that the Nifty would have to do. If we take a look at the daily chart also, and here I'm going to use the chart that I follow every day, we can see here it is doing its best to break out above the recent daily closing high, and that level is 8952.50. So right now this is becoming a problem. We haven't stayed above that long enough to confirm a breakout, so that seems to be early signs of a failed breakout. If bulls want to push this market beyond current levels, they need to push the market and hold it above late 2016's daily closing high here. So without holding above this price range, chances are again on the daily with a failed breakout that the next meaningful direction is lower. And again, the bulls need to move this market above this price range, otherwise failure here and failed breakouts, keep in mind failed breakouts are notorious for taking your markets lower. If we take a look at the monthly chart for the Bank Nifty, we can see that this was the closing high on a monthly basis from 2015. So right now the market is breaking out, looks good. If it can hold above that previous monthly closing high, the level to watch there is 19,843.75, which happens to be this monthly closing high there. So as long as it can hold above this on a price level, that's good. The problem, and maybe you can see this, is the RSI is coming back to test the break here, and this is 3 years worth of monthly data. So this break brings the market lower. You can clearly see that was a sell signal there. We extend this line, which is what I call the uniformity method. Every time we hit this line and you are rejected with uniform activity, the market tends to pull back. We can see here resistance. We did pull back here, and at the beginning of March we're already seeing early signs of rejection. So if this continues on a monthly chart, that the RSI is being rejected, chances are that ultimately the breakout fails and we see another month-to-month pullback, maybe even a major high. Now if you go to a long-term monthly view, this is all data. You can see that this is not where you'd want to see resistance on a monthly basis, because it goes back to this recent break as we see, given that line there. Let's backtest this line, and this line gives you a lot of information. It was a major sell signal and a break during the movement of the highs here in late 2007 as an example. You break below here and you show resistance again there for the highs here and here, and you can see that was for a major bear market. Before that, another major bear market. You show resistance with uniform activity here, which is this high. Market drops, and recently we saw we broke below this trend line, which is off the highs here. The market dropped, and again we hit that same line for the highs here, and we see a market drop. So now if we fail here, that's the problem here. Failure around current levels might suggest that the next major direction is going to have to be down. If we take a look at the South African market, we can see that it's been sideways over the last couple of weeks and months. In fact, it's trading around the 10-week moving average and the 34-week moving average. Sign of a sideways market there. One thing we've been watching for is potential move above this RSI break line. This break of a trend brought the South African market lower. we've been watching this level just above RSI 50 for any potential breakouts. So if prices want to move higher, they're going to have to clear and move above that blue line, and they're going to have to break out of this range. Otherwise, net, this seems to be a market that is, as of right now, stuck within this range. And until we can either break out above that range for a nice move higher or break down, it is tough to read which way this market is leaning. If we take a look at the daily chart for the French market, which was higher on Friday, we can see that it is, in terms of price action, breaking out. So that looks like a nice breakout if you consider only the price. Now the problem is we are coming back to test week daily RSI resistance. As you can see, this was the break, and this was what brought the market lower. And now we are testing and moving to new highs. Draw a line from there. Right now, this is what is in the way of a movement higher. So if this is confirmed as resistance here day to day, I will not be surprised to see that the next major, or at least the next major swing trade, is down. So the markets do need to hold above this RSI level, otherwise we might be looking at resistance even at the current highs. Take a look at the monthly chart. Keep in mind that we've been drawing a line. This RSI break line of the highs of 2015 is what could be a challenge. After we hit this break, market came off the highs there, we drifted lower. Now what we are doing on a monthly chart is testing that line. You can see that it might take a couple of months or weeks before this is either confirmed as a breakout or confirmed as resistance. If we take a look at the longer term picture for the French market, you can see the risk is with resistance here, potentially, given that this was the break line right here, that break of the highs. If we take that break zone and just go backwards, something like that, keep in mind this blue line happens to be at about RSI 61.8. You can see it gives you some of the major sell areas. Sell area here before the major bear market drop of 2000, 2001, 2003. It gives you another major sell signal here off the highs of late 2007 before another major bear market. So what I'm saying here is the last thing bulls want to see is confirmation of resistance on this blue line. If we take a look at the German market, it is also attempting a breakout above the recent 2015 monthly closing high. So it needs to stay above, let's call it about 12,000 would be somewhere in that range. Problem is we are coming back just like the French market. Something we've been discussing week to week, in fact for many weeks, that ultimately markets would need to clear this break zone, which was the break off the highs there in 2015. So this is what is being tested right there. And just like we saw with the French market, if you go backwards, it gives you some of the major highs. In other words, breaking below this line has been a problem. For example, let's see here, you broke below here off the highs of 2000, you broke below here off the highs of 2007. Both of them led to major bear markets. Major bear market, major bear market. In fact, even here, we can see double top here off the highs here before we go into another major bear market situation right here. So the problem is if you show potential and if you show the risk that this is where you stall on the monthly chart, then that's not a good sign. So that's the key, whether we can hold above that resistance line on the monthly. Now you can take a look at the FTSE, which has a similar looking situation. In fact, many of the world markets have had that potential resistance line. You can see topside RSI resistance coming in play. Market would need to be above this line here. on a monthly basis, we are coming back to test this line. Bulls want the market to clear that line if it is to see higher prices. Don't forget that if you consider the break, in fact, let's even go back to this break of 2007, which we know was a major break here before you go into an absolute bear market. Take that information, draw a straight line. You can see that in the current market, we are coming back to test this line here. So we need to be above that, and also bring back the previous topside resistance line. We need to be above these two lines if the market is going to be trading substantially higher. Confirmation of resistance around here ultimately is a bearish sign. If we take a look at the Canadian market, it needs to hold above the breakout level here. In fact, let's zoom in. Zoom in here on a monthly chart. And this is a 5-year monthly chart for the Canadian market. And you can see that last month, there was a great opportunity to break out and hold above the monthly closing high from 2014. The level there was 15,625.73. So we can see as of right now, it is trying to break out. It's about 25 points off that. But you can see it failed to hold above that price in January, gave back most of the gains of actually January was a failed breakout. February gave back gains, closed below that price, and now we are trying to break out. If the Canadian market is to do well, trade higher, record substantially improved highs, it would have to stay and break out above 15,625. Right now it looks like it is a huge question as to whether it can do that, having been that it has tried to do so and failed on multiple occasions. If in fact you can go back to this attempt to break out in early 2015 that failed. So lots of failures around here. We can watch to see the potential for a breakout. RSI would have to hold above 69.1 if the market is to do well. But why above this number? Because if you hold above 69.1, you get this type of a movement. You can see we stay above 69.1 on the monthly RSI throughout this period here. That's a major move for a general market. And so ultimately, this is where we come off 69.1. For more about this level, check the description. I'll have a link giving you lots of examples and explaining why and where I get this number of 69.1. Let's take a look at one more major market, and it is the Brazilian market. Again, this is 5 years weekly. Just watch the RSI here. If I draw a line somewhere there, maybe a little bit higher, you can see that this was rejection of the highs here. We've hit this line once off the highs there. As of early March, if this is confirmed as resistance, that's suggesting that this is also a major high. But where does this blue line come from? We have to take a look at the long-term monthly chart for the Brazilian market. This line goes back to this break in 2010 off the highs here. Since then, it's been a problem. You can see that it turned into resistance right here off the highs there. Rejection with uniform activity there. That's why I call it uniformity off the highs there. And if we form double top here, a major double top, that might suggest that the next major direction could very easily be down. Otherwise, bulls need to figure out a way to move the market above and beyond this blue line. Otherwise, failure to do so, yet again, we see another world market that potentially could be setting up for a major pullback. And the reason why I say that is a possibility, we have to understand that we've come a long ways. If you take a look at where the market has come from, here are the lows in early 2016, here in early 2017, that's a big reversal. So with confirmation of resistance on this blue line, again, this might suggest that we are looking at markets that are potentially pointing down. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. Otherwise, for subscribers, be on the lookout for part 2 of this weekend's market analysis video, which I project will be out sometime on Sunday. Otherwise, enjoy the rest of your weekend. Good luck, peace, and blessings. ESCS. I am out.